Experts are predicting a surge in employment tax audits that they claim is just on the horizon thanks to the Inflation Reduction Act. This development demands employers' attention and preparation. IRS employment tax audits can be just as intrusive as an IRS tax return audit. So what's the current scenario? The Inflation Reduction Act has allocated a whopping $80 billion for the modernization of the IRS. Thousands of auditors are being trained, and I predict a significant increase in audits focused on executive compensation, fringe benefits, and employment tax compliance. This means employers need to gear up and really review to make sure that they have all their tax returns filed, that they are doing it correctly, and that it's being done right, and that they identify the areas of risk. Well, it's very impossible to predict all of the potential IRS examination areas. Past trends suggest that the IRS will follow the money. The auditors are likely to focus on the massive employee retention credit refunds. IRS employment tax audits targets can vary based on the different companies and different industries. Some specific areas of concern include the fringe benefits in prerequisites and travel reimbursements and per diem. With fringe benefits, if a benefit is not provided that's not excludable from taxation, employers could face liabilities. For travel reimbursements and per diem, IRS auditors often focus on the employee's tax home and the business purpose of the travel and the personal aspect involved in that travel. Also on the list are deferred compensation, worker classification, and the tax implications of remote work arrangements. Deferred compensation, especially arrangements under Internal Revenue Code Section 409A, can be a minefield. Worker classifications, particularly the reclassification of retired or former employees as independent contractors, is another frequent area of focus. And with the rise in remote work, questions arise around the tax home location, transportation reimbursement, housing benefit, and the employer-provided office equipment. Now let's talk for a minute how an internal audit can help, or a review can help. This proactive step can significantly reduce the potential employment tax assessment and penalties by identifying and rectifying issues before an IRS audit happens. The IRS itself acknowledges that the effort to correct a failure could justify penalty abatement. When planning and conducting a review, there are several considerations that we take into account. First, it's vital to identify and look at all the stakeholders and information. When planning and conducting an internal review, several considerations are key. Firstly, it's vital to identify and involve relevant internal stakeholders, as employment tax issues impact multiple departments. Secondly, while audits can be conducted internally, outside advice can be invaluable. Thirdly, determining the audit scope is crucial. While potential issues can be overwhelming, not every rock needs to be turned over. Focus on the areas where risks are most likely. Lastly, handling negative findings appropriately is paramount. Action plans to improve procedures and compliance, specific self-correction procedures, or approaching the IRS for resolution can all be effective strategies. So it's clear that being prepared is critical. Corrective actions can reduce potential employment tax exposure and penalty exposure. Acting now before the IRS comes knocking can be a game changer. That's it for this episode. And as always, thank you for tuning in, and hope you have found these tips helpful. If you or anybody that you know is being subject to an IRS audit, you need to give us a call today at 833-IRS-PROB. That's 833-IRS-PROB. You can look us up online at www.irsprob.com. That's IRSPROB. Our local telephone number in the Dallas area is 214-214-3000. In Houston, it's 713-903-3000. San Antonio is 210-333-1000. Austin, Texas is 512-888-1000. IRSprob.com, where you're more than just a number.